Thank you. I will actually do the presentation in English because I was told that that would be the best. So I will now. I hope that's okay for you. I've prepared it that way. So welcome to 25 minutes of Addtech. I see some familiar faces in the audience, but maybe some of you are completely new to the Addtech group and our concept. So I will start with a short flyby of the business model, the concept, our business areas and what they do. I will then talk shortly about our year-end report. After that, a little bit about our corporate culture and strategies. And in the end, a little summary and some Q&A. So our business model, value-adding link in technology trading. What does that mean? Well, for Addtech, this means we have right now around 130 subsidiaries in the group. And with a very high degree of decentralized responsibility, all our companies are very important players between their customers' needs and their broad range of global suppliers. They go to market with a wide range of products, standard products, trading products, customized solutions, and own brands. And the mix of these products, 10 years ago we said that we had 75% standard products and 25% customized solutions and own brands. Today we say 50-50. But actually this is moving all the time against more and more customized solutions and own brands. But we believe that a mix is the best for us. We want to have a good mix between all these kind of products. It makes us minimize the risk and also be more flexible to the customer's needs. We have actually run this group in quite the same way for forever, you could say. And it is a scalable organizational model. We can take opportunities to grow on many markets. We have a good history of acquisitions, a broad spread of segment distribution, and we have proven a very good growth capacity over the years. Right now we are organized like this from 1st of April. We have our 5 business areas: automation, components, energy, industrial process, and power solutions. They are, as you can see, of approximately the equal size. And what brings them together is mainly the business area management structure. It's the same in all of them. And what differs them is predominantly the products and their go-to-market strategies. Very short, something about each of our business areas. Automation, our newest area in the group. It is a spin-off from the components. In the automation area, we have the companies within motion and drives, the fiber optics, industrial IT and sensors. And right now, demand is driven very much from the industry 4.0, the smart factories. The companies in this group, they work closely with OEM customers, wanting to make their production more and more efficient. And these companies, they have a broad range of products within communication networks, cybersecurity, and automated processes. Components. This is, I think, the most traditional Addtech business area. Traditional trading business, agency business. They have a very broad range of different components within electronics, mechanics, and energy. They go to market and have a very high demand on their value-add offer to mainly Nordic OEM engineering customers. Energy, yes. Here we have products and solutions all throughout the electrified energy systems, all from transmission to distribution to installation. And drivers here are obviously the electrification that is going on. We need more and more electricity, and of course all our companies are very well positioned in the whole range here. Infrastructure investment, of course, a lot here. I will not go into every detail here. Industrial process. The companies here, they aim to optimize industrial processes and flows, and predominantly aftermarket, special vehicles, forest industry, marine. They offer products that has very high demand right now due to environmental regulations, for example. And we have one real rocket right now in the marine segment with the scrubbers, the cleaning of emissions. We have several companies in this area selling different components to scrubbers, both in the marine segment but also in the land industrial processes. They also offer products for measuring and flow within to measure and regulate water quality and air quality in aquaculture projects. Power solutions. Here we have our energy storage, power supplies, and customized solutions. The electrification of vehicles is also a very big opportunity for these companies, and it actually also opened the doors for co-creation between several companies in this area to do joint venture in big interesting projects. Here we have a very good pace right now for our customized solutions to special vehicles, our customized battery solutions, and also the charging systems from power supply. Yes, the year-end report. If someone has missed this, it was a tremendous finish of the year for us. We had a very good fourth quarter with a volume increase of 35%. So of course we're very happy with this, and all our business areas contributed. We had good pace in all our main market segments. And from these 35%, actually as much as 22% was organic growth. So how do you explain that? You can look at this picture here and you can see that it is of course quite extreme. And what we also see on this picture is that the organic growth, the last Q4 was actually quite weak. And to remember, we had Easter in Q4 last year. We did not this year. But I think that easy comps and Easter maybe explains 3 to 5% of these 22. The rest is actually very good pace all over. As I said, our main market segments is going very well right now, and all our business areas are very well positioned. But then, of course, we should remember that this was just one quarter. So if we look at the whole year, 11% organic growth, I think that is a relevant summary of the year past. And the profits, yes, it followed the volume growth, very good, a growth of 40%. Also here, all business areas contributed to this. And even though we have been putting on some weight regarding overhead costs during the year, and we see it in the Q4, we have very good operating leverage and very good incremental margins on our organic growth. And also our margin increased by 0.4%. And as you can see on the curve there, we have had an increase for the last 2 years, even though maybe the curve is not doing the development justice. It looks very flat here. So for the full year, I will not maybe go into too many details. It has been a very good year, as you could see on the organic volume growth. All business areas have good pace, and what we think when we look back at this year is that we can see that we now are getting results from our aim to go to market with even more value-added products. All our companies are working very hard on going to the market with even more value add all the time. And also we are very well positioned in big important structural development areas right now, like infrastructure, automation, Industry 4.0, environmental regulation projects and so. And here we can just see that we have had very good growth the last three years, both regarding volume and profits. And of course, it's no doubt about it, we have had the market in our tail. But I think it's safe to say that we have actually outperformed the market these last years. Acquisitions, obviously a very important part of our growth strategy. This year has been a very good acquisition year. We have made 14 acquisitions. It's very, very good, and even four more after the year end. What is nice to see this year is that we have made acquisition on many markets, and all business areas have made acquisitions. And just an overview of the years past, we have a very well integrated acquisition strategy. We have made 90 acquisitions over the last 10 years. Every year we take some statistics from our companies to be able to feel where the winds are blowing. And even though I will not go into details in each of these segments, we can just see on the picture here that we become less and less dependent on any single segment. Of course, our big segments like energy, mechanical industry, vehicle, they are still the biggest segments for us, but we are not depending on any single segment. This is very positive development. New for this year is the transportation segment here. It's taken from other, and we thought that the other should not be as big as 15%. And also it's relevant to see this as a separate segment, because there we have our marine business, which you saw on the industrial process picture. We have a very good demand there right now. And just for your information, around half of the transportation segment is from the marine business. Geographically, yes, we are represented worldwide, as you can see from the light blue countries here. You can also see that still the Nordic region is the most important for us. But you can also see that the Nordic region is actually decreasing as Europe and the rest of the world is increasing. And this is all according to our ambitions. And it's due to both our companies are increasing their export, but it's also obviously acquisitions and also our own establishments abroad, where we follow the customers, for example. A little about our corporate culture. Very important for us are our core values: simplicity, efficiency, change or development, responsibility with a great deal of freedom. These core values are the basis for the way we do business, and it's essential for all of our employees. We have this picture to show what it's like to come into the group for a company. We have the platform, and then we have our companies. They have their own brands, their own decentralized responsibility, very important, and their own market strategy. But what we can offer them is a network for growth with a passion for people, technology, and entrepreneurship. We can offer them a toolbox, and we can also draw the greater picture in many big, more difficult issues like sustainability, digitalization, treasury and finance. We can also enable knowledge sharing and co-creation. And last but not least, we have our Addtech Academy to train our employees. Obviously, our employees are our most valued asset, and it's very important to have continuous development. So we train them in our own Addtech Academy here. So our success factors, as we say, we are combining the strengths of the small company's flexibility and personality with the larger company's resources and networks. Small-scale business, large-scale wise. Strategies. Yes, we have three core strategies: market-leading positions, acquisitions, and operating mobility. Market-leading positions. For us, this means that we should be leading in our specific niches. We don't go for high volumes. We go for low and medium volumes with high degree of technical knowledge. That's where we are best positioned. Acquisitions. I showed this picture before. we have a long history of successful acquisitions. As I said, 90 acquisitions the last 10 years. It's a good pace, and we are having a very good pipeline still on many different markets and regions. Operating mobility. When we talk about Addtech to people who have never met us, we show this picture and we almost only talk about this picture because we think that this is a very key factor to our success, the organizational structure with the decentralized responsibility. We have our business areas and the business units, and the business units have their own manager, and they have around 10 to 15 companies in their group that have something in common. The market, the product, or an agency business, or whatever it might be. And it's a very down-up management. It's in the business units here that we set all the strategies. It's also from the business units that we get the acquisitions. They know their market best. And it's a very close relationship between the business unit and the company. We have, of course, a business area controller and a business area manager, and they all work very closely with our companies. So almost on a daily basis, we have contact with our companies, not to control them, but to support and help them. Financial goals, yes, of course, we have some of those as well. We have the profit growth, 15%, and the profit over working capital of 45%. The earnings growth, 15% over a business cycle, which means that we should double the profit in 5 years. And of course, it's difficult for each company to acquire this, but we have it as a goal for the group as a whole, and we have actually delivered as well. And it's a combination, a very important combination between to always work with organic growth with our companies and also combine it with acquisitions. And the profitability, profit over working capital. Everyone ever got in contact with Addtech or been employed here know what this is. It's our key KPI, and it's efficiency measure of cash flow mainly. And the good thing about it is that all employees can contribute to one factor or another in this function. Yes, quick summary. I showed this picture in the beginning. Why is Addtech a good investment case? Well, we think that this scalable model, our organizational structure, our successful history with acquisitions, a very important growth strategy for us. Our diversity in segments has proven to be a stable deliverer of profit growth. And I think also our shareholders should be at least happy with the development over the years. Our owners, capital-wise, a mix between Swedish and international institutions. Vote-wise, it's still the families Börjesson and Hidelius that keep 31% of the votes.
All right, thank you very much. So a few questions. You addressed a bit why it's a good investment to buy Addtech here earlier. I was just thinking there are a few similar companies in the market today doing this multiple compounding, which is a nice sector to be in. How do you say? Would you say that you differ from your competitors or companies with similar approach to acquisitions?
Yeah, I think it might be important to then talk about our cousins in the family, because I think we are quite alike, and I think you should own us all, obviously. But if you compare us to other peers, I think we have a longer history of working. I think actually our corporate culture and our core values, together with our organizational structure, it's quite unique for us. When I talk to our peers, I meet them sometime. They have a different view of how to be organized with these decentralized responsibilities. The way we manage our business area, very close to our companies, and the down-up management, I think that is our success factor. I'm not all that familiar with how they do it, but I think that we have 100 years of history of doing this right, and it has proven to be a good way of managing this business.
No, thank you. So it's interesting, this decentralization that you mentioned and everything. You have lots of companies under you. Somehow you must monitor them and look at how they're performing. Could you just go into a bit of detail how you work on that, the frequency of it, how you look at each individual company, and if there is any reason to intervene?
Yes. But I mean, one single function is maybe 100% centralized. Then, of course, it's the finance reporting, and we get the order intake every week from our subsidiaries. And we have full profit and ledger reporting and working capital reporting each month from all our companies. And then we consolidate through our business controllers and through our group finance department. And then, as I said, we have our business units, and they live very close to our company. So more or less on a daily basis, they talk to the MDs, and they have the ear to the rails.
Yeah, to the railway.
So to the railway, exactly. So they know what happens all the time, and they can be very quick in reacting.
Yeah, that's a great answer. Thank you. So another thing, so the organic growth is you mentioned favorable markets as well, but you say that you're growing probably ahead of the market. Could you give some concrete example on how you're working with the companies on organic growth initiatives?
Yes, I think again it's very important with this decentralized responsibility that our companies have, because of course we help them with strategies if needed, but what they can do is that they can go looking for add-ons, and they can go to different markets with the same products, and I think they know how to do it, but it's also about the attention. We can see that when we don't have so much attention to the question, then it goes down a little. So it's always this to talk about the organic growth. What can you do? What is your next step? Always, and I think in our board meetings we have a new set now. Back in the days we talked a lot about the profit and ledger, the numbers, the figures, the KPIs. Now we spend maybe more than half of a board meeting talking about the future projects in pipeline and so. So I think we have also shifted focus to all the time focus ahead. Understood. The figures, we are in charge of the figures already, so we don't have to spend so much time on that on the board meetings.
Okay, so another question that I had was a bit, you showed your that you're diversifying your exposures a bit across different industries, but it seems still that a big portion is mostly in highly cyclical business industries to a large degree. How would you? What is your perception of the cyclicality of Addtech as a whole? Let's say that we're late in the cycle. Let's say, how do you see that evolve for Addtech's?
I think right now, even though as you say, our big segments are a bit cyclical, but as I said about the strategy, about being leading in niche positions, I think that is very important to remember, that we have our companies, they have a strategy and they are quite niched, many of them. So it's not that it's just that easy to replace, even though it might be a cyclical segment overall. But I mean, obviously, if the market would go down, it's not that we would be not affected. Absolutely not. But I think that we have a very good diversification right now of our segments and our niches. And our products go more and more to value add. So it's not that easy to just exchange them.
Yeah. And just one final question, just the value add and the customer solution that you provide, just how do you work with that? So not that you have your own product, but you're working together with the client. Could you just give an example of a product or something you've done and how you do this? Yes,
I think maybe the best example is the batteries, maybe the battery unit. We sold, of course, battery cells back in the days. But what we then did was that we saw what is actually the customer doing with these cells. So we saw that they put some cables on, they put them in a harness, and they put them into whatever application. And then we said, okay, we see your needs. If you want, we can deliver this whole solution for you, and you can just put it in your application. And of course, big customers, they love this because they don't want to have 20 different suppliers for one application. So I think that is a very good example of this. And very shortly, I must say that even our standard products have a lot of value add, because I mean, it's not that Amazon can just come and take over our trading products. We have a lot of technological knowledge that we bring to the customer, and we know where to find the right product. So it's not that even those products, they have also a lot of added value, even though it's not many components in one.
All right, understood. I think we have to stop here, but thank you very much for coming, and thanks for listening in.
Thank you.
Thank you.
Very nice to be here.
Yeah.